This past week has definitely been tough as a stock market investor. You've most likely logged into your brokerage account and witnessed firsthand the sea of red that's been going over the entire stock market, and you're most likely wondering what the heck's going on and what you should do about it. At the time of filming this video, the S&P 500 index has dipped by more than 7.5%, the Dow Jones Industrial Index by around 6.5%, the Nasdaq 100 by 7.8%, and the TSX 60 by a whopping 6.5% since the peaks that the market experienced around October 12th. Now, whether or not you're a beginner or a seasoned investor, we're all human here, so you're probably experiencing a relatively high amount of emotions seeing your portfolio go down in value, and this is completely natural to experience. But should you actually be worried about what's going on in the market? This is what we're going to be speaking about in today's video, and I'm going to be sharing my thoughts on what I'm doing moving forward. I really hope you enjoy the content of today's video and that you find value. If you do, please take 2 seconds to absolutely destroy the like button. It really helps my channel grow and tells me that you want to see more content like this. So on that note, let's get right into the video. Hey, what's going on everyone? It's Griffin here, and I hope you're all having a great day as always. If you're new here, then welcome. On this channel, we speak about all types of investing topics such as stock market investing, real estate, and so much more. So if you're not subscribed to the channel, make sure to subscribe and hit the bell button so that you're notified whenever I release new and upcoming content. Today's video is very much sort of a last minute topic because I had so many viewers reaching out to me directly asking me what my thoughts were on the current market taking a significant plunge from that March to September rally. There was a period where the market experienced sort of a U-shaped pattern from September 2nd to around October 12th, and now since then we're seeing a decline in equity prices pretty much across the board, and I've had many viewers reaching out to me asking my thoughts on the matter. Now, for many new retail investors who may have gotten into the market around the March period, this could very well be the first time that you actually experience the equity market dipping and seeing your portfolio value drop by 5 to even 15% depending on your holdings. This can be a tough pill to swallow. For example, if you're someone who's in their 50s or 60s and you're looking to use your portfolio to fund retirement in the coming, say, 10 years or less, well, yeah, this can be a difficult reality. But if you're someone who is a lot younger and you have a long investment horizon ahead of you, I would just pre-frame this entire video in saying that this correction should be seen as another buying opportunity in order to lower your cost basis of the entire portfolio and your favorite positions, but we're going to be getting into that in more detail during the video. As always, if you're still looking to open up your very own brokerage account to take advantage of these discounted stock prices moving forward and investing in your future, then make sure to check out one of the 2 links down in the description to open up either a Questrade or a Wealthsimple trade account, and you'll get some free money when you fund your account. It's as simple as that. Alright, so diving into the first reason that I believe is contributing to the stock market sell-off right now, we have to address the global pandemic issue, specifically in Canada, the United States, and in Europe, which most of the companies that we're invested in are actually going to be located in one of those regions. Now, I've already made it quite clear in previous pieces of content that I did not think that we were out of the woods just yet regarding the medical issue pretty much worldwide, but specifically in North America. Regardless of whether or not you believe the government bodies are addressing the situation in a correct manner or not, well, the reality is that for months now, we've been hearing about this notorious second wave. And when you're looking at the data, well, it would appear that this has actually materialized. Both in Canada and the United States, the daily new cases have surged once again for a situation where we're now seeing the highest cases per day at 4,109 in Canada and 85,085 in the US only a couple of days back. Over the summer months, I'll admit that like most individuals, I sort of believe that things were going pretty well and that by the end of 2020, we'd probably be going back to normal. But obviously, this is far from what we're currently experiencing. The global pandemic has truly turned into a wildcard situation where the future is pretty uncertain around this and when things truly will go back to normal, with an exponential growth pattern that we're seeing right now in new cases. In Canada, at least, we've rolled back measures where gyms are closed once again and restaurants can only do takeout, and a whole bunch of other measures are in place, which undeniably will have a negative impact on business and contribute to economic slowdown pretty much nationwide. Whether or not not these same types of measures will be taken in the United States on a national level or even in a lot of states, well, this is still to be determined. But what's certain is there will be a higher amount of people who are going to second guess whether or not they truly need to go out to a restaurant to eat. And with enough volume in multiple different industries, this is going to undoubtedly slow down the economy once again. I was even speaking with a professional in the insurance space this past week, and he was just telling me how much carnage he is currently seeing for small to medium-sized businesses in Canada where he actually operates. So we're definitely not out of the woods just yet, and the true impact of this entire situation has yet to really surface, which is actually somewhat unsettling. Again though, I'm no medical professional by any means, but I'm just looking at this from an economic standpoint and the impact that it's having currently on the stock market going down. And for any of my physician viewers watching right now, please let me know down in the comments what your thoughts are moving forward for the whole medical situation. But how does all of this tie back to the stock market though? Because for a while we were seeing articles coming out stating that the stock market was not connected to the economy. And while I think there is some truth to this, here's my take on things. During the stock rally of March to around September, optimism was extremely high with a lot of new investors having flooded the market for the first time. And for this reason, tech stocks specifically saw a huge boom in valuation. This was mostly attributed to the idea that tech companies and companies that offer products that the masses can consume at a distance will thrive even during periods of everyone being at home. Case in point, the Nasdaq 100 saw a 78% gain during that period, whereas say the TSX Composite Bank Index that tracks Canadian banks, which typically are not going to do as well during low interest rate periods, this index only saw a 34% growth rate. With this in mind, combined with a variety of other economic factors, well, yes, the stock market can be somewhat detached from the underlying economy in that if tech stocks specifically, for example, are crushing revenue and earnings expectations quarter over quarter, the stock will most likely follow. And this combined with investor optimism is why the stock market has rallied so significantly, specifically in those industries. But what we're seeing right now is that these tech stocks are coming out and crushing earnings once again. However, these stocks are falling in value. So what's going on? This is a phenomenon that I've spoken about previously on the channel, in that with investor optimism being extremely high, well, most likely what's happening right now is that even though these companies are beating expectations on earnings and revenue figures, well, this optimism is somewhat already priced in to the value of these stocks at an already extremely high valuation for what the company truly is. High investor optimism is one of the main contributing factors as to why we're currently experiencing one of the highest levels of price to earnings ratio in the entire S&P 500 in history. The question we need to ask ourselves is, will these companies continue crushing figures for quarters to come with such uncertainty around the market and people also potentially even having less money to spend, and have these earnings already been priced in to the valuation of these equities? This is the main concern at hand, and I think the answer to this is most likely yes. But stock market wide, this is definitely a very bad situation for companies that operate in other industries like travel, restaurants, credit, banking, etc. And the reality is that those companies also make up a large portion of the S&P 500 and other major indexes. Another thing to consider here is that with upcoming business shutdown and potential slowdown of the economy, well, could we see another wave of unemployment? This could definitely be something that we're faced with, especially in the United States with a lack of an upcoming stimulus plan. This brings me to my second point of conversation, which is a lack of stimulus packages moving forward, as well as the presidential elections, which undoubtedly are having an impact on the volatility of the stock market right now. The US stock market is the largest and most influential stock market in the entire world, so it's only natural that the upcoming election of the President of the United States is going to have an impact on the volatility of the stock market and put up some more question marks about what's truly going on regarding the fate of the American economy moving forward. Depending on if Trump or Biden wins the presidential election, well, this is going to have an impact on business as well as taxation moving forward in the United States, and this will contribute to a higher level of volatility leading up to at least the day of the election and potentially even days or weeks after, which is something that we've experienced historically around presidential elections. And this heightened uncertainty also rolls over to the stimulus packages that we're expected to be rolled out across the United States sooner than later, but have now been put on hold with no specific dates in place. According to latest news sources, stimulus hopes are put on hold until at least after the elections, and this goes for both the $2.4 and $1.9 trillion proposed packages by both parties. A new stimulus package being rolled out across the United States would have been a big deal, with lots of new cash being pumped in the economy, and ultimately this is pretty much what propped up the stock market during the last market rally that we experienced from March to around September. This was definitely one of the main contributing factors, right? I mean, I've mentioned in my previous stock market crash videos around the March period that these stimulus packages were one of the main contributing factors to, yes, propping up the actual economy, but also the stock market in turn. In Canada, at least, previous CERB financial aid has now been converted into what we call a CRB payment, but in the United States, an upcoming stimulus package is still on the rocks, leading to increased uncertainty, especially around this presidential election period. And I can't make a video here speaking about the overall economy without once again mentioning the fact that with more money being printed, well, yes, this will most likely have the effect of maintaining market conditions, but in turn will also lead to even further devaluation of the American dollar when speaking specifically about the US pumping money into their economy. It's for this reason primarily that I've been speaking a little bit more about gold mining stocks and gold bullion itself as being a hedge against inflation moving forward. So with everything that we just covered, what do I personally believe is ahead for the stock market, and what am I personally doing with my own positions? First of all, regardless of if Trump or Biden actually end up winning the presidential election, I think that for the short-term period moving forward, it wouldn't surprise me if we continue seeing the stock market actually declining a bit, and this is as a result of the virus numbers increasing at an exponential pace, as well as a lack of a stimulus plan in place for the American people, and just overall emotions running extremely high during this unprecedented market period, along with the fact that the stock market is currently pumped up to an extremely high valuation. So yeah, with all that said, it wouldn't surprise me if the market does end up continuing to see some red for a while, unfortunately, or not unfortunately, depending on your age and overall market strategy. Ultimately though, no one truly knows what's going on right now and what will be the fate of the stock market in the coming months. So personally, I'm not selling any of my current positions and trying to then get back into the market at a bottom price point. Instead, I have some cash on the side that have been waiting for this type of opportunity. I mentioned this actually in my portfolio reveal video that I'd highly recommend you check out if you haven't already. But in that video, I mentioned my cash position and that I was just waiting for some really great opportunities for either real estate investments or stock market investments. And the time has probably now come over the coming weeks or so where I'm going to be deploying a large chunk of that capital into the market. Let's also remember that I'm not a day trader or a speculator. This is something that I've made very clear in my videos. And for this reason, I'm someone who researches companies, and I only make an investment if I truly believe that the company is going to perform well over at least a 5-year period, and even more quite often. What I would recommend, especially if you're a younger investor, is to see this as an opportunity to once again lower your overall cost basis on your favorite positions. If you've been saving up some capital on the side, such as myself, then this is going to be an opportunity to get in at some really discounted price points for future gains in the broad market or individual stocks. As always, on the channel moving forward, I'm going to continue releasing videos where we're analyzing different companies, and I'm going to be giving my thoughts and opinions about various different companies that show opportunity. So make sure to subscribe to the channel and stay tuned for all this upcoming content. On that note, I really hope you enjoyed today's video. If you did, please take 2 seconds to drop a like and let me know your thoughts about everything that I spoke about in this video down in the comments. So thanks a lot for watching today's video, and I'll see you in the next one.